What's up, guys? It's Hardcore Stocks here. In this video, we shall be taking a good look at Meta stock. We could see clearly right here that nothing much has changed from the previous time. The previous time I made a video about Meta, giving technical analysis or stock analysis on this stock or share called Meta. So nothing really much has happened. This is just a follow-up video from that previous video because I made it known to you that there are major levels we need to watch out for, and you could see clearly right here that we are still, dancing around those levels. So back to where we currently are right now, you could see we are still in a downtrend. From the weekly time frame right here, you could see Meta still in a crazy downtrend. Nothing really much has happened. From the monthly also, nothing really much has happened. You could see from the 3 months time frame, we are still at a major support, which with the look of things right here, if you look at it from the monthly time frame, it's not looking good. It's not looking good, honestly. So I think there are major things right now we should consider right now for Meta. The first is the fact that obviously there is no magic that wants to play out right here in terms of trend line and all what's not. We've broken major trend line. You could see this trend line we were expecting, all of a sudden we broke below it. We've retested. This is a confirmation monthly candle. So there is more possibility that we could see Meta dropping all the way down to $384. This is crazy. Imagine seeing Meta dropping. Sorry about that. Imagine seeing Meta dropping roughly how many percent from where it is, 31%. That is going to be absolutely crazy. And you could see clearly right here that this is definitely something Meta does for a while. It drops roughly 75% all the way from when this was 2021 down to just 2021 all the way to 2023. So Meta is actually used to dropping massively. You could see around here it dropped roughly how many percent? It dropped roughly 19%. Over here also it dropped roughly how many percent? It dropped roughly 36%. Over here it also dropped roughly how many percent? It dropped roughly 43%. So this is definitely something I think could play out for for Meta, especially given the fact that we are already down from this high at roughly 29%. We will still drop another 51% for Meta. So I'm kind of skeptical about this right here because this is the monthly, and we have less than 15 days before this month we come to an end. And with the look of things right here, you could see the moment we break below this major support at 568, we could still drop all the way down to 384, especially given the fact that this is currently where the 100 EMA is at. The 200, I think this is obviously the 100. Yeah, this is where the 100 monthly EMA is currently at right now. So maybe from here we could end up getting a rally all the way from this major level, or we could have to miraculously reclaim this major level at 568, break out, find support and rally much higher. Either of these will be playing out. So I think that is just major it right here. Nothing too serious to talk about. In terms of the news right here, based on what I could lay my hands on at the moment from Yahoo Finance, we could see that Meta's $14 billion AI data center faces insurance risk, which is not healthy. We could see Meta Platform Incorporation, the social media and AI company, faces a new risk around its $14 billion Texas data center project with BlackRock, which is crazy. BlackRock. The joint venture is developing a 1 gigawatt campus in El Paso with BlackRock holding an 80% stake and Meta retaining 20%. According to the Financial Times, only part of the project is fully insured, potentially leaving the venture exposed to billions of dollars in losses if the campus suffers a major event. The project reportedly carries up to $427 million in all-risk property coverage during construction, risking to $450 million once operational. It also has $645 million of terrorism coverage and up to $218 million for rent losses caused by construction delays. Those figures remain small relative to the roughly $14 billion development cost for Meta investors, and the issues add another layer of risk to an already aggressive AI infrastructure build-out. Joint ventures can reduce Meta's upfront capital burden, but they do not eliminate its economic exposure if major projects run into construction, financing, or asset value problems. The key question is whether Meta's AI data center generates enough long-term returns to justify both the spending and the risk attached to financing them. So obviously, this right here and the endless article that we have there, tells you whatever you want to make out of, what I just read, or whatever you will be reading from that particular article. So, from my own perspective, I think these are just, regular bottlenecks or challenges that, obviously plays out. It's only a matter of time before, these data centers are up and running, and, Meta will obviously start making money from this. And obviously, this is a long-term project, not a short-term project. Definitely, the AI bubble will come bursting. It will explode, obviously, and AIs will definitely come down. At the end of the day, it's all going to be all eyes on, or all fingers pointing, or all investments moving into the projects or the brands or the companies that have already existed for the longest, that people know that these brands or these companies are here to stay. So at the end of the day, these are the OGs that will definitely, accumulate or suck in all the volume or all the money that will be flowing into the AI space. So I think that is the reason why BlackRock is also having one or two partnership with them, having I think 20%, while Meta has 80%. So I think that is just majorly all I can say for now. If you do enjoy this video, subscribe, turn on post notification, smash that like button, and share this video with your friends, guys. Peace out.